First of all, good morning to everybody. Thank you for tuning in this morning to listen to the readout of the India SaaSonomics report 2023. So first of all, for everyone who's on the call, I just want to clarify, the definition of a startup. So now this definition is close to how a startup is typically defined as per NASSCOM. In our case, this report is specifically focused on B2B SaaS startups. These are companies that are deriving a majority of their revenues by selling software. So it excludes a few segments. It excludes social platforms, marketplaces, payment platforms, service companies only itself, right? But in terms of the definition itself, there are four things that we look at, right? Apart from that, the companies that are less than 10 years in terms of age, that's one. Two is they need to have a strong India connection. That is, the founders have to have an Indian origin, or they should have a significant amount of the product development that is happening from India. It is very much possible that these companies could be headquartered in Singapore or in the US, and that could be from a commercial perspective, a financial perspective. But for all practical purposes, they ideally should be an Indian company itself, right? We are looking at also a set of companies that have at least one product out there in the market. It could be MVP or revenue generation. Obviously it should be funding, should have already got funding. So before we go into the readout, what I've tried to do today is I've tried to structure the readout in a way that it answers some of the most frequently asked questions, in the ecosystem lately. So we'll try to answer all these questions as we go along. And we'll start with the first set of questions, which is, where are we today and how did we get here, right? Firstly, let us call out the elephant in the room, right? There was an 80% decrease in funding if you look at it just from a Q1 22 perspective to a Q1 23 perspective, right? So how do we understand this? Why did this really happen? When we do a double click into this, we'll see that the drop was most significant primarily in the late stage. And we'll cover a little bit more on this later. There was a change in the median ticket sizes. So you see that drop over there in terms of the median ticket sizes going down by almost 2.2x in the late stage. But interestingly, the median ticket size went up 2.3x in the seed stage. What this indicates is that investors are still willing to put their money on promising startups, right? Since also in the seed stage, the investments are typically a much more longer horizon, and that mitigates the impact of any kind of market fluctuations. Also, if you take a look at the fall, just in terms of numbers of deals, right? So if you see, we had 68 odd deals over here, and then we gradually, it kept dropping. But if you see the fall, it is about 33% quarter on quarter year, 30%, 25%. But what you see interestingly is in the last couple of quarters, that fall has sort of bottomed out. What this really just signifies is that what we're anticipating is that the drop in funding has sort of bottomed out and a gradual recovery is expected going forward. So let's double click to understand this a little better, right? As I mentioned earlier, if you see the fall, the dip is primarily high in the late stage. So there was a 90% dip in funding from Q1 22 in the late stage, and this indicates a correction in the valuation multiples, which which causes the investors to sort of reevaluate their investment strategies and exercise caution as well. Whereas in the seed stage, it tells a little different story. So while there was a dip, even quarter on quarter, it does show in the last quarter that there were signs of recovery. So there was a 22% increase in the number of deals over Q4 22. Right. So this is despite the macroeconomic scenario, we are anticipating that investors continue to seek promising startups at this early stage. Right. This just calls out where we are today. However, I think let's take a look at how we got here. Right. And that will give us a more holistic picture of really what was that journey really. So if you take a look at 2020 and 2021, these were in a way sort of outliers here. We had COVID in 2020. And 2021, we saw a very sudden spike in terms of digital adoption. But if you had to draw out a 4-year average funding line, which you can see, we are much higher as of 2022 when we compare it to 2019. So in a sense, what has happened is really SaaS startups have really secured almost 3 times more funding in 2022 when you compare it to 2019 levels, right? So that's 3x more higher. And in fact, in the last 2 years alone itself, almost 2/3 of all equity investment, 66%, in the last 2 years was done out of the last 5 years itself. So there's a chunk of the investment that is coming in. So it just showcases a sustained growth. The other point that it also really shows is the pace of the investments. This is a lot more faster than most other tech sectors. And some of the reasons could be that typically SaaS offers more scalable solutions. There's recurring revenue streams, possibility of immediately having global expansion and a reach in terms of global customers. So that's the reason why we've seen this sort of accelerated growth in terms of investments. So let's take a little deeper look at the year-on-year figures in terms of SaaS equity funding, right? So from a late stage point of view itself, despite that there being a drop in the funding value from 2021 to 2022, the funding raised in 2022 is 6 times higher than that what was done in 2019. Similarly, if you look at it in the early stage, the investments went up significantly, almost 60%. Over 2021 in terms of value of funding, and almost 2.3x over 2019 levels. Similarly, again, in the seed stage, that's almost 4x in terms of 2019 levels. So what we're seeing is if we take a step back and look at the data from an annual basis, there's actually a very sustained growth that we're looking at. And since we've been continuously talking about like the multiples itself, let's study them a little bit more in detail. So I would like to spend a little bit more time on this graph. What you can see on this slide are the enterprise valuation to revenue multiples on the left-hand side. And on the right-hand side, you see the timeline. What we've tried to do is split this up into 3 parts. Pre-pandemic, that is from Jan 2019 until March 2020. April 20 to October 21 is the pandemic period. And post that is the post-pandemic period. In the pre-pandemic, the median typically hovered around 9.5x. Then that's when the pandemic really hit us. And what this did is really accelerated the market significantly. That means the adoption of SaaS accelerated abnormally from that period of 1.5 years that happened over there. The market as such did not significantly expand. So for example, if the TAM for SaaS was just hypothetically speaking 100 billion and we were 10 billion, it was going to take us 10 years to get there. What it did in this pandemic period was that it got us from to 50 billion in just 2 years instead of taking 5 years, right? So that's really what happened. So as a result, what you see is that there were peaks in terms of digital budgets. Cloud spending was at all-time high, and all this happened during this period itself. What happened post-pandemic around October, November 2021 is that there was also a lot of macroeconomic headwinds, and that started to come in at the same time as companies started cutting back on budgets. And one of the key things that came up is that how can we, where is that we can cut corners, right? And one of the areas which came up was that optimizing your cloud spends. And the key reason is that cloud spends typically took up a significant share and was a recurring format. So hence what you see a significant drop really is rationalization that happened post-pandemic in the multiples. So again, taking a step back, looking at the graph, 9.5x is where we were. Today, we are at about 6.8x, which is about 30% lower. But if you see the graph a little more closely, it dipped below and now you are seeing it stabilize a little bit. So what the good news here is that there are signs of gradual recovery as of Q1 2023. And we are expecting this to gradually pick up. Will it really go up to the pandemic levels? Maybe not, right? But what we're really aiming for is for it to at least hit the pre-pandemic levels sooner rather than later. So while we look at multiples recovering over here, what are some of the other things that we are really excited about to share with you today? 3 key figures that I want to share with you, and these really showcase 3 different points, right? So one is the number of unique funded startups have grown by 2x in the last 4 years. So we had about 800 startups as of 2019, and we're looking at around 1650 to 1750 startups as of 2022. And this shows that we are now starting to build a larger pool of innovative and scalable SaaS companies. If you look at the number of unicorns, just the last 3 years alone itself, 80% of the unicorns have been created in the SaaS space. And this pool continues to expand. So, currently we have almost a very healthy pipeline of almost 29 potential unicorns. And if you look at it from a global standpoint itself, while the US is definitely far ahead, India has been gradually building its position as a strong player, showcasing its capability of building competitive products that are being scaled globally. So we overtook Israel last year and the UK, and for that matter, we've come up to the 3rd position globally. So this brings me to the next question, right? In the new world, does India hold a comparative advantage for SaaS? So what we did is we conducted a survey of 130 plus founders and investors to gauge their pulse on multiple topics in the report. One of the topics that we wanted to understand is that, does India still have the advantage? And if so, where does it exist? And what are the areas where the advantage really exists? So what I'm about to share with you is really findings from that survey itself. What came out from the survey, and one of the strong points which came out, is that 9 out of 10 investors that we interviewed from the survey continue to believe in the India advantage. And if you look at the key points over here, there are mainly 4 points which really stand out. Out of which 2 are points which are around talent pool and cost advantage that could be applicable to even the larger tech ecosystem. And there are 2 points around communities, networks, and the flywheel effect that are more relevant to SaaS. So let's cover just each of the points in a little bit more detail, right? So the 2 points around talent pool and cost leverage clearly stood out with high confidence across both founders and investors. From a talent perspective, India has the 2nd largest pool of tech talent, 3 million strong pool of tech talent. This is just only after China. But what we do have is a higher English speaking population. We have a very large supportive ecosystem which is nurturing this talent. Today, if I just talk about the number of Indian developers, there are about 10 million Indian developers using GitHub today. And India is the #1 contributor to AI, related to GitHub repositories. So very strong talent pool over there. The second point, which is much discussed out there, one of the points which usually came in the circles recently is that if the costs have the costs been going up, does India really still hold that cost leverage? What we found out is that there's a 3x higher cost of setting up a 10,000 member team, R&D team in the US than in India. So there's a significant cost leverage that India today holds. So that's 3x higher to set it up in the US than in India. The other 2 points that I would really like to talk about over here is one is the communities and networks effect, right? So this was a stronger point which came out from the founders. The SaaS community has grown gradually since 2005, 2010. And has now become a very large ecosystem that is supporting the founders in this journey. And this point, like I mentioned, resonate very strongly with the founders. Maybe not as much with the investors, but on the other hand, the investors are able to take a larger lens view of the ecosystem and are hence able to gauge the impact of what we are calling the flywheel effect. What we mean by the flywheel effect is essentially employees that are part of larger Indian SaaS companies, or they could also be part of other companies within the larger tech ecosystem. It could be IT services, big tech, legacy software companies. They're leaving these companies to go on to join to create new SaaS firms, right? So essentially, these 2 points I would like to cover in a little bit more detail, but these 2 points show the more relevant strengths in terms of SaaS. So from a community point of view, pre 2010, there were few SaaS Indian large SaaS companies that are now unicorns, right? You have Freshworks, HighRadius, etc. And later we had, so in this period between 2010 to 2015, that's where we had, say, the first few SaaS communities come up. We had the first SaaS conference, which really connected the ecosystem. What we saw between 2015 and 2020, early 2015 time is where we saw the Google Axel report, which really called out what the shed light on the potential of the Indian SaaS industry, which Sinav authored. Later, we've seen large SaaS communities, founder communities, usher up. SaaS Boomi, a large community, was open in India. We had US chapters. What essentially all of this is doing is it is allowing the flow of information, from those key markets to India a lot quicker. This makes it a lot easier for founders to make iterations, to pivot if required, and so on. Right, so that's just helping the founders in terms of scaling their businesses. And then recently we've also had a lot of companies come up specifically with cloud accelerators, right, coming into play. So and in addition, there's tons of content that is being published in this space. So what we're seeing is this space is the founders. SaaS founders per se are really being nurtured by the ecosystem. Challenges that some of the larger startups have faced in their journey are being communicated to the ones who are starting out. So they already have a playbook of sorts to go work towards, right? In terms of the flywheel effect, so we studied the flywheel advantage. And again, this gets quoted as an advantage a lot out there in the ecosystem, but the quantum of the impact really was not being quantified. So we just took a small set, and we took a small set of 21 unicorns. And these 21 unicorns alone have produced 185 plus new SaaS companies, of which 45% of them are already funded. And the interesting thing over here is that already from this 185, there's a pool of 10 companies that are now potential unicorns, right? So the point that we're trying to drive over here is that even with this limited sample set, there are really good quality startups that are being founded. The talent in that sense is being contextualized, trained, nurtured, and are able to deliver a lot more value. And this is just when I'm talking about the startups coming out from the Indian SaaS unicorns. If you look at it from the larger tech ecosystem, that flywheel effect is even higher. So earlier, if you remember, I mentioned about the point that our base of the active companies itself went up. We are basically looking at the flywheel effect to be one of the key triggers as well, because just a bulk of these companies that have come out from the flywheel effect, 60% of them were founded in the last 3 years. So that multiplier effect is coming in, and we see this increasing in terms of that bottom base. It's more like a pyramid if you think of it that way, right? So we keep the pyramid keeps building up and growing. Right. So coming to our third set of questions, when will the market or the bulls turn, really, right? What do the next 6 to 12 months look like? As part of our survey, we also captured the outlook. One key point must have come to everyone's mind, right? So we spoke about valuations earlier itself, and we said that, okay, valuations are gradually recovering. So what's really in store, right? When are the valuations going to recover? So what I'll do is I'll cover the outlook in two parts. One is from an investment perspective, investment climate perspective, and one will be from a business perspective. So first, let's understand it from an investment climate perspective. We asked this question to both founders, saying, when do you anticipate valuation multiples to really recover to pre-pandemic levels? And we're talking about, before 2019 itself. And what we saw is that founders generally are a little more optimistic, and they're saying that, there's a higher probability that it's probably going to happen within the next 12 months. But we feel that, they need to prepare in terms of investor caution that is still there, and work based on really worst case scenario. From an investor's perspective, they want to sort of be doubly sure in terms of their investments, right? So they're probably going to be looking at more evidence through a stronger due diligence. They're looking at startups which have much more stronger fundamentals. The kind of metrics that they're evaluating are just not going to be growth oriented, but also looking at efficiency metrics. So in summary, while it's really difficult to put a number to it and predict what exactly will happen in terms of the multiples, and of course, factoring that nothing significantly changes in the macro level, but based on the pulse from the founders, from the investors primarily as well, and looking at some of the interviews that we've done with some of the experts in the industry, we're looking at least about 12 to 18 months where we're seeing the recovery. And something will come to your mind is saying that looks like a slow recovery. I agree that it'll be a slower recovery, but we feel that it'll be a more fundamentally stronger recovery. That brings us to the next point. In terms of deal activity and in terms of exits, how will that change really in the next 12 months? So both deal activity and exits based on investors. This is in our conversations and our survey with the investors. They're confident that this will increase gradually over the next 12 months. If you see the pulse is not overly optimistic in that sense. So we feel that it'll be a little more gradual. So it'll pace out over the quarters. Next will be to understand from a sort of a business outlook. So, we asked founders what are their key strategic priorities over the next 12 months. And what really came out is about half of the founders that we interviewed ranked revenue generation as the key strategic priority in the next 12 months. This was over, things like product innovation, raising funds, building stronger customer success teams, etc. So as a result, if you see what's happening in terms of just the operating expenses and how they will shift in the next 12 months, based on our survey, what came out is that you see them increasing their sales and marketing budgets. And what this could be used for is to sort of reinvest that money into, for example, marketing. Marketing costs today are at a low, right? So it's a good time to sort of double down on that. Invest in headcount that could be more specific on sales and marketing. Maybe optimize the headcount in the other areas, right? So it could be optimizing the headcount in SG&A or in terms of R&D spends. But the whole focus is really going to be on revenue generation for some of these startups, as the market has become a little more tougher to crack. You're fighting stiffer competition. So that's where you're looking at them moving towards doubling down on sales going forward, right? One point I want to really call out over here is when you talk about, say, late stage startups, they are also focusing on improving the customer success teams. This is from a point of view to really reduce churn, increase their upsell, cross-sell opportunities with their existing base of customers. Right. So given these efforts in terms of pushing onto sales, what we are seeing is based on the inputs from the startups. When we ask them what is your projected ARR for the next 12 months, the key point that stood out is 93% of the founders that we surveyed are optimistic of the ARR growth projections. Right, they feel that it's going to be increasing or significantly increasing in the next 12 months. And just let's look at it from a revenue perspective. We are at about 10 billion today in terms of revenue as of 2022. And we've almost doubled in 2 years itself, right? And in the next 4 years, what we're expecting is that this market is going to go up almost 2.5x. Now, obviously, you should keep a note that when you compare this to global, India is growing at a smaller base, and hence the growth is higher and is more sustainable. Obviously, when we're factoring in this growth, we've also kept into mind that there is an optimization of cloud spends that is expected going forward. There are delays in sales cycles, and hence the revenue that you've planned for this year will factor in the next year, and so on. So based on this and from the inputs that are coming in from the survey, we feel that a healthy 25 to 28% growth could be achievable over the next 4 years to hit 26 billion as of 2026. So given the target of hitting 26 billion is there in front of us and sustaining high growth, how does the ecosystem really navigate through the headwinds and the challenges that are there going forward, right? How do we need to get there? So what you have on the left-hand side is really, we ask the founders, what are some of the top challenges that you currently face and that you foresee going forward? And while these were some of the anticipated challenges, they were broadly categorized under a growth and efficiency bucket. From a growth point of view, what they were looking at it is, or from a revenue point of view itself, what they were looking at is there were delayed sales cycles that they're experiencing. And the other point which you're really experiencing is reduced customer demand. So as I mentioned earlier, they are doubling down on growth to be able to usher up their budget, and they're ushering up their budgets on sales and marketing and figuring out how they can really unlock more revenue with the current resources. From an efficiency angle, the other angle, what we're looking at is that as the revenue multiples will not remain the only factor that investors will look at, this will be another key things that founders will really need to look at closely. right? So for example, asking questions like, how can I improve my cash flows? How do I extend runways? And while doing so, how can I improve EBIT margins to be able to better feed into better valuation when I go in for my next fundraise? So what you see on the right side of this is really systematic interventions that can be adopted to be able to do so, right? And the report, really deep dives into each of these interventions into more detail and talks about some of the key metrics that were typically or traditionally leveraged to evaluate startups. These metrics are now evolving. So, what is it that you need to really look at more closely going forward? Right. So speaking on the growth point, since startups are looking for newer avenues, it brings us to the point of what are some of the newer areas that can be looked at. So as we probably a little okay on time, what I'll do is I just highlight what we have done briefly and share some of the key findings over here. A question which sort of frequently gets asked is, where should I take my business ahead, right? What are some of the new areas that I need to explore? Or from an investor's perspective, what's hot in SaaS? What will continue to keep buzzing over a sustained period of time? And what we've done is over here is we've looked at two parameters. One is from a current attractiveness point of view. In the current attractiveness point of view, we looked at few elements. That is the customer awareness. What is the adoption among B2B customers in terms of those SaaS solutions? What is the level of competition? What are some of the market dynamics, and how trending is this thing? What we also looked at another angle is in terms of the scale, the future potential index, right? So in the future potential index, the factors that we've considered is what is the disruption potential for these solutions? What is the growth potential going forward, and how nascent is the idea? So depending on how nascent the idea, that just gives you that much more scope and headroom for growth. So we looked at it from two lenses. This lens which you're looking at right now is the category lens. So there are three broad categories that we typically look at within SaaS. Horizontal HBA is really horizontal business applications. Then you have VSBA, which is vertical specific business applications. HIA, which is infrastructure applications. And what we've done is built an index on the X and Y axis and plotted these key categories onto this chart. What you see out here, what's coming out clearly is, from a category lens, we have seen a lot of increasing interest in terms of vertical SaaS. When you look at the kind of sectors that are there, which we've called out over here, these are sectors that typically or traditionally were slower adopters of some of the digital or slower digital adopters, right? And now we see that there's a lot of scope for really scaling up in these areas. The other area which is really coming out is DevOps and cybersecurity very, very clearly, right? So just if you think of it from a DevOps point of view, India has 10 million developers as of now, right? So it's a very large developer base that we have over here. And as there are more and more SaaS and digital sort of solutions coming up, the importance of cybersecurity, protection of the data, privacy of the information comes in and becomes even more important. So we see, cybersecurity, DevOps to be some of the key areas which are there in terms of SaaS, and the vertical SaaS being the other big larger bucket, which comes across, say, areas like industrial manufacturing, retail, healthcare, BFSI, and so on. The other lens that we really looked at it is from a technology lens. So if you look at what really came out over here, we looked at 5 different technologies. We looked at Gen AI, Web3, quantum computing, edge computing, and AR/VR. What really stands out very clearly, obviously, and everybody's aware of it, generative AI and Web3 are very, very, disruptive sort of technologies that have come into place. They have very immense potential to transform the industries and the markets. So we've seen that it getting a lot of traction. If you look at just Gen AI itself, I think India has 16 million AI developers, right? One of the largest AI developer bases in the world. And that's really one of the reasons that we've got 800 plus startups that are working just purely in this Gen AI space. So we are seeing that this is going to go up significantly. There's a huge disruption potential going forward. Right. So what I'm trying to do right now is just sort of summarize what are some of the key things and elements that are coming out from the India SaaSonomics Navigating Growth and Efficiency report. Key points that we discussed, founders having a very being very optimistic in terms of the growth. 93% of them said that they see that ARR will increase in the next 12 months. And as a result, we're looking at India SaaS market to increase by 26 billion by 2026, growing by at least 2.5x over the next 4 years. 9 out of 10 investors continue to believe that the India advantage holds strong. So, we discussed about the talent pool advantage. We discussed about cost leverage and primarily about the communities growing up as well as the flywheel advantage. There are 3x more funding that has been secured by SaaS startups in 2022 as compared to 2019. In terms of the number of unicorns, India ranks third globally, just in terms of SaaS unicorns. 29 potential unicorns are there in the pool in the pipeline. 96% of Indian SaaS unicorns, potential unicorns, grew headcount through 2022. So this is an interesting point as well, which came out from the study that despite the macro headwinds that you saw, in the last year itself, 96% of the Indian SaaS unicorns, potential unicorns, grew their headcount. And in contrast, in the US, there was a lot more, almost 3x higher in terms of just the layoffs that happened. In terms of the number of active SaaS funded companies, we spoke about how the flywheel effect has come into play and how that has resulted into a multiplier effect and doubling the number of startups in that pool in the last 4 years itself. Investors are anticipating that the deal activity exits are expected to pick up in the next 6 to 12 months. And valuations, we feel that will be a little more gradual, as we discussed, in the next 12 to 18 months. Finally, we feel that from a technology perspective, from a new trends perspective, DevOps and Gen AI are areas where we really feel that could be really big avenues for growth going forward, right? We have 10% of the global developer base in India, 16% of global AI talent base, which is there in India, which are really massive numbers. So all in all, I think what we're looking at is India being well positioned in terms of working towards becoming a key player and a prominent player in the global picture in terms of delivering SaaS solutions that are more scalable, competitive from a global standpoint. That sort of summarizes the readout. Thanks, and over to you, Stuti.